My name is Kyle Samani. I'm a co-founder and managing partner at Multicoin Capital.
How plugged in are you? Do you ever step away from crypto?
I've gotten better about this over the duration of Multicoin. In the earlier parts of Multicoin, I was exclusively working.
Recently, there's been some discourse on crypto Twitter kind of pushing back on VCs.
The criticisms are absolutely valid.
Anti-VC narrative has been meme coins.
Meme coins are getting an outsized percentage of PR and airtime relative to their actual economic importance.
What are you kind of looking forward to in the next months, years of crypto?
With crypto, we have created new financial rails. So the primary thing that will matter is getting those rails to more people.
Crypto will create the largest one-time shift in wealth in the history of the internet.
The thing that undergirds money is property rights. Property rights are the foundation.
Awesome. I'd like to welcome you to the podcast. Let's start off with you introducing yourself.
Hey, Jack. Pleasure to be on the show. My name is Kyle Samani. I'm a co-founder and managing partner at Multicoin Capital. We're an investment firm focused on investing in crypto. We are 6.5 years old now, going to turn 7 here in October. So one of the oldest and largest crypto-focused investment firms out there. We have two major funds we run. We have a hedge fund, which is a liquid vehicle that owns a big pile of liquid stuff. And then we have a series of venture funds. We are currently investing out of our third venture fund.
Fantastic. Yeah, it's been interesting. I remember right when I got into crypto, reading some of the early, blog posts from Multicoin, and you guys have really had interesting and unique theses throughout the 7 or 6.5 years that you guys have been in operation. So it's been cool following along and obviously ups and downs and theses kind of playing out. It's phenomenal to watch the growth and performance. So congrats on that. The first thing I'd like to talk today about is just kind of demystifying a bit like your work and your life, because obviously you're incredibly productive as a VC, whether that's writing and investing. I think you guys have a lot of volume. But I'd really like to hear just more about kind of what your day-to-day looks like. So for example, a day like today, what are you doing in terms of kind of investing in Multicoin?
Yeah, I generally have a pretty structured schedule. Very fortunate. My girlfriend is awesome and is flexible around that. But, I wake up most days. I'm a morning person. Without an alarm, I typically wake up around 6:30 pretty regularly. Typically we'll work out in the morning, sometimes weights, sometimes cardio, and then shower. I'm going to start my day. My day is mostly responding to messages, so telegrams, emails, Slacks, etc. I kind of view a large part of my job as being a router, and I'm just like in a lot of information flow. Some of that's administrative internally, some of that's founders connecting to other people, whatever. And so, I generally think turnaround time and response time is very important in my line of work. I think I probably assign a higher importance to response time than most. Mm-hmm. So generally aim to be available and responsive. Obviously, I'm on calls, but I'm frequently multitasking and texting while I'm on calls. And so, I'm on calls on and off throughout the day, and then I'm dealing with messages on and off throughout the day. I think probably the thing I struggle with the most in terms of day-to-day schedule is, deep work kind of time. As our portfolio has grown, as our LP base has grown, as as an institution we have grown, I have increasing priorities for my time, and so it's become harder and harder to devote blocks of time for deep work. I do so from time to time, but admittedly, that's probably the thing I struggle with the most.
That deep work, what does that look like? Is that research? Is that reading? Kind of how do you classify that time?
Yeah, deep work would be, bespoke research on some topic. So I'd say the best example of that recently where I've done a substantial amount of bespoke research as it pertains to an investment would be Zama, which it's been a while. It was about a year ago. But, with Zama, for context, for those who don't know, Zama is kind of the world's leading company in fully homomorphic encryption, or FHE. and I knew what FHE was prior to even getting familiar with the company conceptually, but I just didn't know all of the details. There's a few kind of mathematical classes of FHE. What are the trade-offs? Who invented which branch? How have those branches been evolving? Who are the companies, in those sectors? So there's like a whole bunch of kind of, follow-on things that, before writing a big ticket into a company like Zama, you would obviously want to do DD on. And so, like that process was probably, I don't know, like 20, 30 hours of work collectively over, some period of time. So it's hard to find those blocks of time these days. Typically they'll emerge if it's like, hey, I have excited about some investment, right? And then we'll dedicate that time accordingly. But otherwise it's hard to get those blocks without, some strong motivation. But I'm fortunate that our team, at this point is super mature and robust. Spencer, Shayan, Vishal, are all doing outstanding work, and we just hired Eli. He's a few months in now, but our team now is really leading the charge on most new diligence.
When kind of analyzing that diligence from your team, is it mostly written? Do you get on a call with team? Is it kind of async messaging? How does that research and investment process look like?
So at Multicoin, I think we bias towards bringing things to IC earlier and sooner in the process than other investment firms would. I say that with kind of a speculative tone in my voice because I've never been part of another investment firm's IC, so I don't actually know. But I'd say based on just like commentary I've picked up from other people who work at other funds over the years, my sense is we bring things that are less baked to IC than others do. I have reflected on that and thought about, is that good or bad? And I generally like the way we have approached it for a couple of reasons. One, I want to learn about other things. And obviously I can't get on the phone with all of the entrepreneurs. That's just like by definition not possible. So I consider IC an education opportunity for myself to learn about other things. And it is good to learn about things that are above some minimum quality bar. Obviously, if it's like pure garbage, I don't care. But if it's, whatever, above some threshold, then and like someone, they spent some time on it. They spoke to the entrepreneur. It was interesting for whatever reason. Then I generally will defer to our investment team's judgment of, hey, should Kyle at least learn about this and just be aware of it? So I think that's pretty important in terms of like, and it's not just Kyle learning from others. Obviously, the inverse is also true, right? Which is they should learn from me. And I do bring deals to IC that I expect will fail on that basis. I think the other important point is more of like a cultural thing of bringing things to IC that don't make it through. I think, if you think about your evolution as you join an investment firm, as a new analyst or whatever, obviously you want to get things through IC and like do deals. That's obviously your motivation and your bias. And it is very natural to think I will be judged based on my hit rate of things that come through IC. But that is in fact incorrect. And so like there is a weird discrepancy between natural human bias and actual mathematical reality. Now, mathematical reality is I don't care how much you bring to IC, as long as you bring one thing that makes a lot of money. I don't really care if you brought 10 things that like we talked about and didn't do, like whatever. I will care if you bring things to IC and you're intellectually dishonest about like the merits in the discourse. That's a problem. But so long as you're intellectually honest, like great, I don't really give a shit. Like the worst case is I learned about some stuff, right? So who cares? And so I think it's important culturally to send the message to people of explore, go look at weird things, bring weird things to IC. They don't need to be fully baked. The sense I get interacting with analysts at other firms is like, oh man, I got to impress Mark Andreessen or Reid Hoffman or Roloff or whoever. And like it's got to be super super polished and baked and tight. And then sometimes you can't be super polished and baked. So I want to make sure that we from the top down, send that signal very clearly to the rest of the firm of like, look, bring some shit. We'll talk about it. If it doesn't go anywhere, it doesn't go anywhere. Like, there's no negative repercussions or negative consequences of that. Right. So we have IC twice a week, and talk about a lot of stuff, eyes wide open that, a lot of it's not going to happen.
Mm-hmm. What about interaction with other investors, whether that's liquid venture side funds? Are you pretty siloed, or do you like to kind of interact with the space largely?
I'm a very extroverted person naturally. Love to talk to people, love to listen and learn. I'm very active on Telegram. So interact with other funds all the time. We generally aim to be more collaborative probably than most people of our comparable fund size. There is kind of an inherent effect of like, as your fund size gets larger, you become less collaborative because like you need to take allocation in deals. So I understand why my peers may be less collaborative, and I don't fault that as like a personality thing or whatever. It's just a math problem. We do our best to reserve allocation rounds for other parties to be involved. And obviously, if like there's some like person who has a strategic value to the firm, to the company, then we will typically go out of our way to pull them in. So we tend to want to be pretty collaborative. We've certainly benefited from other people sharing deal flow with us over the years, and we generally try to reciprocate in kind of broad general terms where we can.
Mm-hmm. Regarding going back a little bit to the kind of day in the life, how plugged in are you? Do you ever step away from crypto? I know like recently there was some interview with SBF talking about how he looked way better in prison, and people were making the joke that prison is better than crypto. So 7 years requires some level of constitution. What do you do to step away, if at all, or are you just like built different?
I've gotten better about this over the duration of Multicoin, for sure. In the earlier parts of Multicoin, I was exclusively working and not doing anything else. Today, I have a more balanced lifestyle. Mm-hmm. I spend more time with my parents and such, and family, friends. So, have appreciated the reality that I'm running a marathon and not a sprint. It's also like I'm not running a startup with a hope that Google buys me. I run a profitable business. We intend to operate indefinitely. Like, I'm 34 years old. I will hopefully be doing this when I'm 64 years old. Mm-hmm. Eyes wide open that duration is part of it. So I've come to appreciate that longevity and duration challenge the more I've done it. In terms of how I step away, I'd say mechanically on a day-to-day basis, it's generally my exercise, which is a mix of cardio and weights. For my primary form of cardio is cycling. During the week, typically indoor cycling. I'm a customer of Wahoo. I have their kicker bike. I love their system. And on the weekends, I've got a group of buddies that I cycle with, and not every weekend, but probably 1 out of 4 weekends or something, we'll go on a long outdoor bike together, ride together. And I live in Austin. The hill country here is awesome for cycling. It's great. And then obviously love to go to the weight room. I go to a kind of like an NFL inspired gym. So very heavy gridiron, AstroTurf, kind of open space vibes. It's a pretty cool spot in Austin.
Regarding that, I think there's kind of two things I hear. The one is the crypto meme, which is you need to be, maxing on your online time, right? You need to be have your laptop open while you're sleeping, watching the charts or whatever. That's kind of one meme, because in these reflexive kind of bullish periods, people think, you need to be taking advantage. Personally, I've found that literally just stepping away and going for a walk and thinking tends to some of my best ideas come out that in that kind of period. Do you think that you have the privilege to step away a little bit more as you become more established, as you've grown the business, or do you think that time in the trenches is really kind of unbeatable in terms of how it brings value to the table?
I mean, it's you need to do both. Step away time is important. I take the dog for a walk now once or twice a day. Love that time to just think and see what comes to my brain. There's real value there. There's real value in just laying in a hammock or whatever your form of peace and meditation is. So I generally encourage folks to do that. I think probably the biggest thing that's changed is scale. Turning $50 million into $250 million is X degree of difficulty, whatever X may be. But turning, 3, 4, 5 billion, let's say 5 billion into 25 billion is much harder in difficult. That's like 200X difficult.
Right.
And so I appreciate, the difficulty of scale in terms of return of capital to our LPs. And I've also come to appreciate that I don't reading the marginal white paper is probably not the right way to do that. It's to make sure I'm zooming out and really thinking hey, what are the broad trends that I can identify with a high degree of conviction where I can play with size.
Right.
And that's a different game than turning 5 million into 50 million, right? Roughly every order of magnitude, the game changes. I don't know if I'm, I think I'm pretty good at the game of turning, call it 100 million into a billion, plus or minus. It's unclear if I'm good at turning 3 billion into 30 billion. Mm-hmm. I'm obviously trying my best, but, eyes wide open, that's a different game.
You talk about, you just mentioned, doing this when you're 64, taking this for the next, X amount of years. And you're one of the most established firms in the space, so you have some credibility there. It seems a little bit maybe not contradictory, but it's interesting to juxtapose that against your at the top of your thesis page on Multicoin. You say crypto will create the largest one-time shift in wealth in the history of the internet. So that one-time shift, when I read that, it kind of piqued my interest because it seemed like one-time shift means that there's kind of this limited window, this limited opportunity. So how do you view that opportunity and then kind of the length of that opportunity?
Yeah, so I think time scale here matters. Look, in some broad sense, there was the internet revolution, call it, I don't know, the 25-ish year period between 1995 and 2020, roughly, is a one-time shift in humanity. On a time scale for humanity, that's actually a fairly small window of time to create wealth. And I generally kind of think about crypto in a similar lens. I don't mean to say there's going to be a 6-month window and maybe it starts next month and that's where all the gains come from. That's not the implied. Right. Or the implied logic. The broader thing is the foundation of, you've all know Harari has his book, Sapiens, talking about, money and it's a story. Money is a story. We all share with one another and it works. And that story allows us to do coordination and make everything work and stuff. The thing that undergirds money is property rights. Property rights are the foundation of social coordination. And, there's the famous saying, possession is 9/10 of the law, is kind of reflecting that reality. And, the older I get, the more I appreciate the importance of property rights. I look at obviously Biden talking about, taxes for unrealized gains as a direct attack on property rights. It's probably the most direct attack on property rights in the history of the United States, if I were to guess. And so I think about coming back to your one-time shift in wealth thing. We, for the first time, have digital property rights. And the way you pull that off is a combination of public key cryptography and permissionless consensus. And those two things combined give you the strongest form of property rights that have existed really in human history. And that's a big breakthrough in social coordination and capital formation and allowing people to tell that shared story about money. So the reference in the blog is kind of to that broader, lens of thinking.
Right. So going back a little bit in time, how did Multicoin start, and what were your goals with the fund and personally with Multicoin?
So we launched Multicoin. I was 27 when we launched it. I'm now 34. We launched Multicoin because we thought crypto was cool, and we thought we were better investors than builders. We being Tushar and myself. Why did we think we were better investors than builders without any evidence to support that theory, but just based on kind of theory? I know I like reading. I love reading. I can sit around and read all day. And reading doesn't have to be long form. Reading can very much be Twitter. I love Twitter. Twitter is incredible. So it can be Twitter form. It can be white paper. It can be email, whatever. Give me some form of information to consume, to digest in my brain, and I will consume it. And then render judgment accordingly. And I excel at that and love it. Tushar excels at that and loves it. And we both understood that about each other. And we're like, okay, well, like that kind of core knowledge and passion probably maps better to investing than building. And we had both tried building before in healthcare, which didn't work out for either of us for a whole bunch of reasons. So we were like excited to go sit on the other side of the table, given our experiences as entrepreneurs and given what we thought intuitively about ourselves. And I'd say most of those intuitions panned out correctly. So that's kind of why we started Multicoin. In terms of what are our objectives, look, we wanted to deliver great returns to our LPs. We've generally done that. We, at this point, want to continue to do so, but at this point, we consider ourselves stewards of the industry, and are doing our best to, help the industry be as healthy and successful as possible, and to really accelerate the future of the industry, and obviously do good for humanity. Coming back to the kind of rant on property rights from a couple minutes ago, and looking at this, Biden tax on unrealized gains, this is really important for humanity to get crypto out there, to get the crypto ideals out there. And these benefits are very intangible and very squishy, and they're hard to appreciate. And it's ever more important to get this stuff out there so that we can enforce property rights for everybody.
Yeah, it's interesting that you say that now, especially, recently there's been some discourse on crypto Twitter kind of pushing back on VCs, whether that's, due to the kind of high FDV meta, or it's just due to the fact that it feels like access has been less democratic. Is this pushback justified? What does a VC, is VC necessary in the space to kind of amplify the industry, right? And say, and kind of fund that early stage layer projects, or what would you say to those people who are kind of critical of VCs at the moment in crypto specifically?
The criticisms are absolutely valid. They're, I think, a little bit misplaced, but they're valid. They're valid, mathematically, launching a token with a 3% float or 6% float or whatever is bad. No questions asked. Now, I say the criticism is a little misplaced because a lot of it is implying the VCs are the puppet masters in the background who are orchestrating the game. And that is not the case at all. The primary reason the low float system exists is because of the Securities and Exchange Commission in the United States. I believe it's Rule 144, if I'm not mistaken. I don't appreciate all of exactly what it says. Our legal team can tell you more, but the basics of it are, you got this 12-month thing where if you're an investor and you buy this asset, you can't resell it for 12 months or whatever. So that is the foundation of a lot of the reason you have low float, high FTV. I actually tend to push our portfolio companies towards no vesting and just do a cliff at 12 months. Because that like is like the legal foundation. I'd say, Multicoin has done, call it somewhere between 200 and 300 deals since inception. I think there's one founder or one company that we've invested in that did that. And not because I pushed them to, but because they intuited all of this on their own, which is Solana. Solana very famously had the vesting chart. Obviously, every team has the other graph that shows the stacked line charts with tokens, over time, team, investors,
Right.
community, etc. And Solana very famously had a vertical line on January 7th of 2021. And it was so incredibly fudded. And everyone's like, oh, Multicoin and the VCs are evil. They're going to dump on retail. And that was one of the best decisions Anatoly and Raj made was to do that. And I remind our portfolio founders about this all the time, and they generally don't listen to me. I'm not going to beat the dead horse and try and like exert excess pressure around it. But I at least inform them of this fact. I remind them of what Solana did. I explain my general logic and reasoning, and then they do whatever they do. It is what it is. So the coming back to your question of like, is the criticism valid? It's definitely valid. It's frustrating. It's annoying. And like, look, I want to go buy a bunch of like high quality liquid names, but then I look at them and they have a 4% float, and I'm like, I don't want to buy an asset has a 4% float. I want to buy an asset with a 40% float or a 100% float. So it's very frustrating for sure. I don't really have a solution because unfortunately we're bounded here primarily by regulation. If Kyle was dictator of all of the world's laws and regulations, I can tell you what I would do, which is I would say absolutely no restrictions, 100%. Everyone please launch with 100% float on day one. I realize that will come with a lot of its own negative repercussions. There will be people who will abuse the system, eyes wide open. But for the good actors in the system who are building generational wealth and pushing society forward, it will net enable that capital formation to accelerate. So, there's like a fundamental tension here between putting rules in place to prevent bad actors from abusing people versus facilitating good actors to maximize rate of capital formation. And unfortunately, there is a very direct trade-off there.
Right.
No, go
Interesting that you refer to Solana here because I know Solana actually had a token sale on CoinList, and I forget what it was at, but it
22 cents.
Insane returns for investors. What do you think about kind of other alternative distribution methods, whether that's ICOs, LBPs, airdrops?
I'm very supportive of teams selling tokens in whatever legal mechanisms they can to the public at large. I don't like airdrops on a relative basis. Airdrops are warranted for certain things. Obviously, if it's deep in, if it's like you bought a hotspot and like you live in New York City and you're producing useful, radio waves, like you obviously should be compensated for that. Or you mapped, these roads in whatever, Atlanta or in, Austin, on a Hive mapper. So that's extremely warranted. If you are the first person to put money into a new DeFi protocol, that is also warranted that you should receive tokens for doing so. Because, look, obviously there's a borrow-lend rate. It's a market. The price, rates will go up and down based on supply and demand. But there is an additional form of risk that is specifically idiosyncratic to new DeFi protocols, which is smart contract risk. And there is no way to make that risk go away. And in fact, the only way to fundamentally mitigate that risk is to have more dollars in the protocol for a longer period of time. We have an explicit methodology for underwriting risk in DeFi protocols internally, which is that. We look at the integral of TVL. And so, the early users of a DeFi protocol, I believe, have a justified reason, to receive compensation because they are the ones who took on that smart contract risk. But like beyond that, airdrops start to become fairly frivolous. And I'm generally in favor of selling tokens to people, whether it's via CoinList, whether it's via LBP, whether it's via some other mechanism. People value things when they buy them. If you get free money that falls out of the sky, obviously you're not going to value it as much.
Right. Part of this kind of dynamic around this kind of like anti-VC narrative has been meme coins, and I think people have seen them as a bit more kind of, open and anti-VC narrative. What do you think about this whole trend towards VC or towards meme coins, and in what ways does it positively and negatively affect the crypto industry?
I'm extremely supportive of the existence of meme coins. Older I get, the more my view of the world becomes somewhat simpler in terms of like let people do what they want to do. If they want to smoke cigarettes, they should smoke cigarettes. I'm glad we have, signage on the box that tells you, this is bad for you, it's going to kill you. I'm glad there's social stigma around smoking cigarettes, but you should have a right to smoke cigarettes. Right. Obviously, you can go to the casino. You should have the right to buy Doge or WIF or whatever else you want to buy. So very supportive of their existence on a first principles basis. I have been hopeful that we could have meme coins turn into something beyond a strictly speculative system. I've put out a handful of tweets over the last few months, kind of hoping that would be the case, talking about how do you monetize open source software. Can we use Solana's token extensions to productively reallocate some capital from these meme coins into a more productive mechanism somehow, some way, something. As far as I can tell so far, there's been no productive reallocation of capital. So I'd say I'm disappointed, primarily. I continue to follow and look around and, tweet about it and stuff, looking for, interesting ways to reallocate that capital or parts of that capital. But so far, disappointed. I think the general anti-VC thing, pro-meme coin thing, is more narrative than reality, meaning the percentage of total crypto volumes that are meme coins is a rounding error. The majority of the volume is the majors, Bitcoin, ETH, and Sol, and drops off pretty precipitously after that. So meme coins are getting an outsized percentage of PR and airtime relative to their actual economic importance measured in dollars traded. So it's just fun to talk about. And obviously there's some symbolism around the anti-VC thing. I get it and why it happens, but just you need to acknowledge there's a delta between PR and reality. And then, I'd say the last bit of it is I'd say the last part of that critique or that reasoning I've seen is, retail wants to punt on meme coins because the VCs are going to dump on them. I think there's some truth to that. I generally think it's overstated because the problem is the universe of capital that wants to buy meme coins is just fundamentally limited. I believe in buying productive assets. I don't like non-productive assets. I've never owned gold. I never will. I do own some Bitcoin, although I frequently shit on Bitcoin and continue to dislike it because it's a non-productive asset. Meme coins are obviously non-productive assets. I believe over the long horizon, capital reallocates away from non-productive things to productive things. So generally, I think that meme coins will always be kind of like a fun sideshow until they can become productive. No one has cracked that yet. I continue to look for someone who's cracked that. I generally am open-minded, looking for it, but haven't seen it yet.
Right. This is an interesting segue that I think connects a couple different things. So you talk about this idea of a productive asset, and then you also talk about the idea of VCs kind of having a responsibility to create and fund the world where crypto, kind of is able to consume, other sectors. Crypto eats the world, right? Software eats the world is kind of meme that sometimes is referred to. And then I know you guys recently invested in Mezzo, and then there are a couple of other Bitcoin layer 2s that are actually turning Bitcoin into a productive asset via kind of like proof of stake, what I would call proof of stake or proof of stake adjacent things. So I guess, connecting all of this, how do VCs kind of expand the pie for everybody, right? In terms of like this responsibility to grow the industry. And then to what degree can VCs shape the future of crypto?
VCs are risk capital, and they should take risk to fund new things. Some of those things are more important just for society than others. I very much view I have a moral obligation to try and fund things that improve society. I have my eyes wide open that a lot of things I fund will have some negative effects as well. They will not be unilaterally positive. But I'm generally of the belief that the things we fund will be net positive. I would hope most VCs operate accordingly. I don't think most VCs particularly think about that question, but I would hope they act positively. I guess that was part of the question. What was the other part of the question?
I guess the other part of the question was how can VCs contribute to a future that expands the industry versus kind of like being extractive or focusing on kind of short-term outcomes?
The answer is, wanting to invest in things that, things where you don't necessarily, the best thing VCs could do is to not invest in things where they have a high probability of making some money, but they are eyes wide open that what they're investing in is not meaningfully contributing to improving the industry.
Okay.
But look, there's no way to get all the VCs to coordinate and do that. So, incentives are what they are. I understand the incentives, and I'm not here to judge people for following their incentives. It is what it is. I think generally the economics will adjust over time, to disincentivize bad or stupid behavior. So far, that has not been the case, just given where liquid assets in a lot of these areas trade. But I'm generally an optimist that, the market will adjust accordingly and will start to penalize folks who are playing suboptimal games.
Mm-hmm. Fantastic. You guys have kind of famously invested at all layers of the crypto stack. Does this change over time? An example of this would be an oversaturation of layer ones and layer twos, moving down to kind of applications, or recently we've seen tons of infrastructure investment and some people criticizing the lack of kind of consumer facing applications. How do you see this kind of progress over the next years and even decades?
In general, we should be moving up the stack in our investments. We have pretty explicitly called this out in a lot of our LP materials. If you look at VF2 versus VF3 fundraising decks, for example, we talk specifically about moving up the stack. So I generally aim, in an ideal world, I would never look or think about infrastructure ever again. I don't think that's actually the reality, but certainly a smaller and smaller percentage of my time is spent thinking about lower level issues. Today, I spend the substantial majority of my effort thinking about application layer issues. And I do not expect that to change.
Mm-hmm. It seems like part of the reason that this dynamic has existed at the top of the stack is because with something like Solana, you can imagine that it eats all financial infrastructure, right? Where if you look at something like, maybe Pump.Fun, we know that is limited towards this, specific speculative, piece of the market. So I think people can dream bigger at this infrastructure or smart contract platform level, where the application seems like it has kind of built-in constraints. But But in Web 2, in a lot of ways, the value has been captured at the application layer. Do you think we'll see a shift in valuations moving towards applications?
Generally, I believe barbell is probably what plays out here. I think asset ledgers will be permissionless asset ledgers will be extremely valuable. We obviously are very bullish Solana, own a lot of Sol. Could be an L2 or an L3 or whatever. That's more of like a mechanical question. But I believe asset ledgers that control permissionless consensus and block production will be extremely valuable because they can capture MEV. And then there's a bunch of middleware stuff, which broadly I'm pretty bearish on. Certainly given implied valuations for most of it. And then application layer is very interesting because anything that interacts directly with customers is by definition important.
Right. Switching lanes a little bit, what have been your biggest misses in crypto, whether that's specific investments or it's just kind of broader theses?
Look, we missed restaking. Shriram pitched us on the seed round. I told Shriram, this does not solve a problem. That was 2 years ago. Fast forward 2 years later, I stand by my statement. But look, everyone's fucking excited about restaking. So were we wrong? I don't know. It's still TBD. Were we wrong financially? Yeah, without question. Same is true for Celestia. What's the guy's name? The founder of Celestia, not Nick White, the other guy. Mustafa. He pitched us. It was called Lazy Ledger, seed round. I was like, dude, cool separation, academically interesting. I don't care. Not interesting. So totally missed that one. Uniswap, we didn't speak to Hayden specifically, but certainly we knew of it. We could have reached out and probably tried to figure out how to get some exposure. I was like, AMMs are bad because why would you want to make bad trades? So we've missed a bunch of stuff that's been important. In all three of those cases, we stand by our initial claims, despite the fact that those things may have become useful or used or popularized, and their tokens have gone up. We still stand by our fundamental first principles criticisms of those systems, and why we did not invest and why we continue to not invest. So, we've missed a bunch of stuff. Do I regret it? Not really. That will happen more. So, it's fine. It is what it is. There's always a feeling of like, you got to catch them all, and you don't have to catch them all. Understand the game you're playing, understand why you're playing it, know where your strike zone is, and stick to it accordingly.
Do you have any kind of notable cases where your theses have changed? So like the AMM question, right? A lot of Solana activity has moved to AMMs recently. You're a big Solana supporter. From a first principles perspective, that seems a bit contradictory. How do you view that contradiction? And then, have you had any notable kind of changes of opinion?
I don't think it's a contradiction. Solana was built to support an on-chain order book. It's not quite there yet. Hopefully post Fire Dancer it is. We'll see. But they're trying to. And like the preponderance of evidence in the world is that the vast majority of liquid assets trade on order books. Because obviously that is true. So I think it's the tech's not there yet, but it's getting better. So I don't view that as a form of hypocrisy or something. It's just look, AMMs are simple, so people throw them down and whatever, people use them and play with them. It's fine. They do have their place, especially for meme coins, because market makers don't want to market make meme coins. So they actually do serve a new purpose, on that basis.
Right.
So that's great. Um, Other areas where we've changed our thesis over time, changed our view. I mean, I don't think like any of our theses have really changed. We've certainly adjusted course in terms of specific, like which team to bet on along a thesis. So like famously, we were long EOS and that didn't work out. And we kind of went long Solana and stuck to that. More recently, still looking at storage, we were early Arweave. We eventually grew frustrated there, sold all of it, adjusted to Filecoin, went long Filecoin. So like for different reasons, but like, so yeah, we will adjust our, views over time, but like our view hasn't been like, oh, decentralized storage bad, now decentralized storage good. No, certainly our views on decentralized storage have evolved over time as we've thought about it more. But not sure that like we've really been like DeFi bad, now DeFi good, or meme coins bad, now meme coins good. That's never really been the case.
Interesting. Perfect. I'll start wrapping it up, but my final kind of question or thread is, what are you kind of looking forward to in the next months, years of crypto? Crypto obviously has evolved in some ways that are perceived as positive, some ways that are perceived as negative. You're obviously incredibly bullish, not only on the price action of crypto, but on the societal benefit of crypto. What specifically, veins of crypto are you looking forward to watch playing out and watch kind of impact the world and the real world in a bigger way?
With crypto, we have created new financial rails to move money around in faster and more efficient ways. So the primary thing that will matter is getting those rails to more people. So we generally spend a lot of time today thinking about peer-to-peer exchanges, fiat on and off ramps, wallets, those kinds of things, stable coins. And I'm very excited to see the proliferation of those things. Those things will not generate a lot of press relative to their importance because the most of the customers of those systems are not the people who work at the New York Times or the Wall Street Journal or whatever. So it's quite literally out of sight, out of mind kind of a thing. But I'm very excited about the growth of that. And then I'm pretty excited about the opportunities for new forms of capital formation that become possible on top of these crypto rails. The best example of this is DPIN, where like very definitively, this is a new mechanism for capital formation. We continue to look for other teams, pioneering new models for capital formation on crypto rails.
Phenomenal. Awesome. I think that's a great note to end it on. A crypto hopeful future. And yeah, congratulations on all of your bets that are looking pretty good right now. So it's been awesome chatting with you. Where can people find you? Anything you'd like to plug?
Thank you for having me on the show, Jack. Pleasure to be here. Long-time Twitter follower. Great to be on the show. In terms of where to follow me on the internet, I'm pretty active on Twitter. My Twitter handle is my name, Kyle Samani, KyleSamani. I'm also on Warpcast with the same handle as well.
Awesome. Thanks, Kyle.
All right. Thanks, Jack. Appreciate it.